When we think about the percentage of M2 money supply in Brazil that should be tokenized, that should be represented in stablecoins, I kind of think it should be a high single digit percentage in 10 years, which when you kind of look at the math, feels like it's about a trillion BRL. And I do think it's a winner take all market, if not a winner take, winner take most, winner take all market.
Hey everyone, welcome back to Brazil Crypto Report, a podcast produced by Activo Media and Advisory. I'm your host, Aaron Stanley, and today I'm joined by John Delaney, who is the CEO and co-founder of Crown. Crown is the issuer of BRLV, which is Brazil's newest stablecoin. He recently announced a $13 million Series A investment round led by Paradigm. Before we dive in, I do want to give a quick shout out to our show sponsors. We have Avenia, which is building seamless infrastructure for cross-border payments in the Americas, and Figment, which provides staking services to more than 1,000 financial institutions globally. We'll be hearing more about them later in the show. John, thanks for being here today.
Thanks for having me, Aaron.
Yeah, it's great to have you on the show. I've been looking forward to this for a while. To get started, I'd love for you to give us the elevator pitch on Crown and what you're building.
Absolutely. Very happy to do that. So Crown is an issuer of stablecoins denominated in Brazilian reais. Our stablecoin BRLV is today the largest emerging market stablecoin. We have over 360 million BRL of stablecoins subscribed. And there's a couple of reasons why we've been able to do that. The first is that we're the safest and most secure stablecoin on the market, I believe in the world, actually. So we have a very, very safe structure that combines a bankruptcy-remote reserves holding with a set of guarantees that make it so that even if Crown fails in the future, the holders of BRLV are able to get their money back through an actual perfected legal interest in the reserves backing the stablecoin. And so this is something that's been referred to in the Genius Act, but hasn't been implemented anywhere else. So we're very proud to be the first ones globally to implement a structure with that level of security. And then the second reason we've been able to have this early success is that we're solving a problem which is very acute in Brazil, which is that the interest rates here are very, very high. And so for institutional customers that want to earn some of that yield, we're actually able to do that at a very deep architectural level. So, if you compare it to sort of like the Tether story in the dollar market, they keep the interest that's generated by the treasury bonds they hold in their reserves, whereas other stablecoin issuers kind of share it with their institutional partners, and we do that in a super efficient way. So we think that that's how we're able to sort of go after the institutional flows in Brazil, which are the main driver of volumes today in the stablecoin industry here.
And yeah, you guys have kind of come onto the scene really hot in just the last 3 months. You announced your a seed raise a few months ago, and then just a couple weeks ago announcing the Series A raise, and now you're obviously by volume the largest venue in the world. Your is according to your metrics, so very impressive. Before we dive into BRLV specifically, I'd love for you to take a few minutes to just introduce yourself more properly. And I know you've been kind of in the Brazil scene for quite some time, and our paths have been crossing in all sorts of random places around the world over the years. So it's fun to finally be able to interview you here. But I'd love to just have you take a minute to introduce yourself, and how did you end up in the Brazil stablecoin game?
Yeah, I've been in Brazil for 15 years. So I moved here kind of permanently in 2010. I was a lawyer at the time, so I started my career working in the financial markets in law in a large law firm in New York called Cleary Gottlieb, which is sort of the big law firm that deals mostly with Latin American clients and sovereign clients. And so I did a lot of structured finance work, which is very relevant to this project. I moved to Brazil in 2010 to open Cleary's Brazil office. So I was the first lawyer here in Brazil, and I got to work on a bunch of really cool stuff, especially around structured finance and fintech. So, for example, I represented Goldman Sachs when David from Nubank hired them to help figure out the credit card funding stuff for Nubank. So Nubank at the time, their first product was a credit card, but most banks that issue credit cards also have bank accounts that they use for funding, and Nubank at the time didn't have that. So they needed a funding source, and I was Goldman's lawyer structuring that. So I got to know the Nubank team really well, which is becomes relevant for Crown later on, which maybe we can get to. From there, I didn't love being a lawyer. I kind of went straight through from high school to college to law school to big law firm. and over time realized it wasn't really my jam. So I started angel investing on the side in Brazil, most successfully, I guess, in as a seed investor in '99, and then a bunch of other startups as well. And I started arb trading Bitcoin in 2013. So that was my entry into crypto, was sort of just seeing the market structure and the premium that existed on Brazilian exchanges. So I was a very early Mercado Bitcoin customer back in 2013. And shout out to those guys. And it's funny, there was a big premium in Brazil. It wasn't like big or liquid enough to have like a cool moniker like the kimchi premium in Korea, but it was sufficiently big that it was a fun thing to arb and to learn about the market structure. And that got me into the Ethereum ecosystem eventually after Ethereum launched. And one thing led to another. I kept a foot in traditional fintech. So I was helping run a company called Sherpa in Brazil, which was a earned wage access company similar to like a daily pay in the US. And that was sold in 2021. And since then, I've been full time in crypto.
Yeah, and I think the first time we met was when you were working at Sherpa still. I think we met randomly like in Davos at World Economic Forum. You were hanging out with the drummer from Guns N' Roses randomly. And then I think the next time we met was in Washington, D.C. We both were living there, we overlapped there, living there. And then now there's obviously the Brazil connection. So it's going to be kind of fun just seeing your journey here progressing over the years. And we keep kind of bumping into each other at these different touch points, which is random but fun, I guess, kind of part of the fun of crypto.
Yeah, man, absolutely. And no, it's funny. Actually, that was way before Sherpa even. This was a long time ago. That must have been 2018 that I don't know. I feel like we met maybe because you were running Consensus also, right?
Yeah.
Back in the day. I feel like we might have met during one of those events, but for sure in Davos. And running around with a crew of crypto people. And this was back when, Joe Lubin was hosting mid-mountain lunches at Davos. So that was the crazy sort of post-ICO days. And it's been great to keep in touch with you and see how well you're doing and bringing some of the knowledge to Brazil. So it's been awesome.
Yeah. I love these gringo Brazil connections. They're priceless. So So let's dive into Crown and BRLV a bit more. And the first question I want to ask is, because Brazil has become, I don't know, I don't have any like numbers to prove this or anything, but it feels like Brazil is probably the most active of any like non-USD stablecoin market. Just in terms of like the number of stablecoins out there and the volumes that folks like Rodrigo Trindade of Iparanga, who I'm going to be interviewing next week, has been like doing a really good job of trying to track these volumes and the issuances and et cetera. And so I guess the first question is like, why does Brazil need another stable coin, right? And you answered some of those questions in your opening monologue, but like, why did you decide that like, hey, there's an opportunity here that's not being addressed by the current products on the market? What was the kind of the impetus for this project?
So Brazil is very interesting, right? It's a very large country with a lot of young people that love experimenting with new financial things. And you see a really, really strong central bank fomenting a lot of innovation through various ways. And it's this country where, you have I think a top 5 country in terms of crypto adoption. You've got a top 10 money supply in the Brazilian real. So, very, very large, over $1 trillion M2 money supply. And it's a great place to do business. So that's a big part of it. And then I think when you look at some of the characteristics of the Brazilian economy, you see, I sort of look at the dollar market, and a few years ago, it wasn't super obvious that stablecoins would be like a major part of the story of, of either crypto or like just the US economy. And then now we see stablecoin issuers like Tether and Circle are some of the largest holders of US treasuries and among the very largest net buyers of US treasuries. So they're like strategically important for the US. And I really believe the same thing is going to happen to Brazil, because all of the reasons why stablecoins are great and useful in the dollar market apply to other markets, and especially markets like Brazil that are big innovative and tech forward. So, Brazil, again, top money supply. It's a very forward thinking country, and it has it is not dollarized at all, right? So if you compare it to other places around Latin America and around the world, there's all these countries that like issue their own sovereign debt in dollars, or issue bank accounts for regular people in dollars, issue credit in dollars. And Brazil is not like that. I think among countries, certainly in Latin America, it's the least dollarized place. And so in the context of this migration that we're in from off-chain pieces of financial infrastructure to on-chain, all of the stuff that moves on chain, and you've interviewed a bunch of guys who run tokenization platforms and other pieces of this infrastructure moving on chain. All that stuff needs stablecoins to work, because without stablecoins, you're constantly settling tokenized assets back into fiat, and you lose a bunch of the efficiency that was the reason for tokenizing something in the first place.
Go back to the point about the Brazil being the least dollarized, or one of the least dollarized of these large Latin American markets, maybe other emerging markets globally. Like, why is that such a relevant kind of part of your thesis? Figment is the leading independent provider of institutional staking infrastructure, with over $18 billion in assets under stake and more than 1,000 clients across Latin America and globally. Banks, exchanges, fintechs, and asset managers can earn secure and compliant rewards on proof-of-stake networks using Figment's non-custodial infrastructure. They offer everything institutions need to stake with confidence: point-and-click staking, real-time portfolio tracking, powerful APIs, audited infrastructure, and industry-leading slashing protection. Head over to figment.io to learn more. I'd like to take a moment to tell you about our show sponsor, Avenia. If you're building a wallet, a crypto consumer app, or a global payment platform, Avenia is your bridge to Latin America. You can instantly connect to PIX, SPAY, and CBU using stablecoins with a single API. No banks, no FX desks, no SWIFT. Head over to avenia.io to learn about how you can move money globally with full compliance and real-time settlement. Now back to the show. Go back to the point about the Brazil being the least dollarized, or one of the least dollarized of these large Latin American markets, maybe other emerging markets globally. Like, why is that such a relevant kind of part of your thesis?
So if you think about like where local currency stablecoins are most likely to take off, at least in this sort of initial cohort, I would say there are three things that make it more likely, right? One is like very big money supply. So Brazil has one of the largest. The second is it's not dollarized, right? And so more and more of the economy is based in local currency. So here in Brazil, people really actually do live their lives in the local currency in a way that's actually surprising for a lot of foreigners when they come to Brazil for the first time. So if you're like a US based or European based investor and you're used to sort of dealing with investments around the world, you're probably used to dealing with countries where the dollar is a little bit more widely utilized. And in those countries, it's actually, you have an argument that dollar stablecoins do the job, right? Because listen, if people want to use some on-chain or tokenized asset, they can access it through dollars. They have easy access to dollars, and they want dollars. In Brazil, I think the thing that's surprising to most people is that it really isn't the case here, right? Like people actually think in Brazilian reais and live in Brazilian reais. And that's partially just a cultural thing, partially because of the size of the country. Even like Brazilian music is sort of like its own thing, right? So Brazil's so big that it is able to maintain this kind of independent spirit, but it's partially a policy set of priorities as well, right? The central bank could easily sell debt in USD, but they choose not to. And I think, maintaining control over the currency has been a major priority for Brazil. And frankly, they've done a really good job at it.
The other unique thing you mentioned about Brazil is the 15% interest rate, or the like among the highest interest rates of any large economy in the world. And specifically in this era where yield on stable coins is kind of the big kind of next, that like the next big meta, I guess, in the stablecoin world. And there's some fights going on in the US and elsewhere about this. But your thesis is that like a stablecoin in Brazil, for a stablecoin to succeed in Brazil, like the holder has to be able to be getting a cut of this yield, right? It can't just be like a tether type of thing or a USDC type of thing where you're getting a distribution fee from the issuer that they pay out to their institutional partners or whatever, but they're not getting like that yield isn't necessarily like baked into the asset itself. Maybe talk a bit about just I guess your thesis around this and why the yield distribution mechanism is like such a core feature of BRLV.
Yeah, so that's actually the third thing. So I mentioned there's three things that make local currency stablecoins appetizing in specific markets, and so the first two I mentioned. The third is really about yield, and arguably you could say there's a fourth, which is having a really strong pro innovation central bank. But focusing on the yield for a second, so if you're a international investor and you're looking at local currencies, typically you're doing so, and you sort of look at the interest rate together with the price action of the currency. If it's sort of like a traditionally really strong currency like the Swiss franc or something that tends to not depreciate against the dollar, the real tends to depreciate against the dollar. So we've seen a depreciation of something like 45% in the last 10 years, which sounds really bad, right? You're sort of like, well, why would anybody want this thing? And it sort of begs the question, why hasn't Brazil dollarized, right? If the currency is like that weak that it depreciates 45%, man, isn't it better just to hold dollars? And the answer to a very large degree is tied to the interest rate, because the interest rate is so high, and it's like a real interest rate that's positive and outpaces inflation, such that a person who held dollars 10 years ago and then traded all their dollars for BRL and then just kept those BRL only earning the risk-free interest rate, the government borrowing rate over this 10-year period, at the end of that period would actually have more dollar value than somebody who just held dollars the whole time earning LIBOR. And that's like a crazy thing for most people to encounter, but it's true, right? And so it's almost like the interest rate is like half of the money, right? You have the actual fiat currency that depreciates, but then you have this interest rate. When you couple them together, that makes the money better, right? It makes the currency go from a relatively weak currency to actually a strong currency. And so when I was thinking about this problem, and I think if you sort of think about it from first principles, like this is a very, very basic part of macroeconomics in Brazil. And the idea that you could tie those two halves of the money together is really cool to me. And actually, if you think about it, blockchains enable this. Before, there was no way to do that because you need some kind of a ledger where you can like tie those two pieces together, right? And so that was really exciting, and that I think is very, very important for us. And then the first person I called with this idea was Ed Weibel, the technical founder of Nubank. And Ed, we went out for a beer and started talking about it. And the reason I called Ed was that it felt very Nubanky to me, right? It's sort of like the original idea behind the Nu Conta bank account product that delivered the CDI, sort of the interbank interest rate, to holders automatically. It's kind of the same thing, but you don't even need a bank, right? Because this distributed ledger does the work of allowing you to tie the two halves of the money together. And so Ed got really excited, and fortunately, joined us very early. He was an early advisor and is now on the board. And yeah, I don't know if I answered your question, but yeah, happy to dive in more on the interest side.
Yeah, well, the yield I mean, this is really interesting what you're saying, because this is, I guess I'd never thought about the problem in this particular way you described it. Whereas, starting in 2010, like if I would just taken all my dollars, put it into Brazilian reais, and just earning, the Selic rate on top of that, or the CDI rate on top of that, like I would have more than if I just kept my money in dollars, despite the Brazilian real depreciating pretty massively against the dollar over that period. So that's a really, I mean, I guess that kind of, it forces you to like rethink of what, like, because normally you think like, oh, these are all these kind of soft currencies. These are just kind of things you want to get out of as fast as possible because there's liquidity risk. They're valuing against the dollar. The whole objective is just to get out of these currencies. But the way you're describing this problem is like, look, like if you think about it in terms of the money and the interest together as like one thing, they're not two separate things that someone's patching together, but you have this asset that's issuing the yield natively on top of the actual money itself. That's just, I don't know, that's like, I guess I've never heard this problem like framed in that way before. Like that's super, super novel, super interesting to me.
That's a great point, Aaron. And this idea that there's actually these like two halves of the money is kind of the way that carry traders conceptually think about the world as well. So if you have somebody who is kind of going short one currency to buy another, they're in like to earn the interest in that other currency or other asset. That's a carry trade, right? And so it will come as no surprise with this, kind of in the context of this story where Brazil has this really high interest rate, to hear that it's a very big carry trade as well. So right now, the Brazilian Central Bank publishes a report every month where they basically talk about all of Brazil's public debt and what percentage of it is held by non-residents. So again, these foreigners who are coming into the currency in order to buy Brazilian government debt and earn this interest rate. And it's a very large trade. It's $150 billion, more or less. And it stays pretty consistent over time. So that's like just a little bit of a way of measuring the size of the market opportunity just related to the interest rates. And it's actually really hard for those traders to get into this trade. Like like if you, Aaron, wanted to just like run a spot market carry trade, you'd have to open a special kind of bank account in Brazil, a non-resident account. You'd have to appoint these like legal tax and regulatory advisors that would respond to the Brazilian authorities on your behalf. It's very bureaucratic. It takes months to open. And so we're able to kind of like give the same economics to carry traders internationally, but with one-click execution, 24/7 liquidity, and a much faster setup time and takedown time. And I think the net effect of that is that Brazil will be able to export the interest rate a lot more. And then the downstream effect of that, of course, is that BRLV and Crown become sort of like tether and circle to US Treasury bonds. We become a liquidity sink and a net new buyer of Brazilian government debt, which hopefully will actually help alleviate some of the interest rate pressures in Brazil over time.
And BRLV itself is 100% backed by Brazilian government debt, correct? Maybe talk a bit about the structure behind that, how with the reserve composition, how you guys have structured all of that.
Yeah, I have been using stablecoins in dollar for over a decade. And one of the things as like a lawyer nerd that always bothered me about some of the structures that issuers use is that you never really know what's going on with the reserves. So it's like, if one of these issuers like went bankrupt, for example, would creditors that issuer have, would those creditors have access to the reserve assets? And like, what would happen to like my claim as a holder of the stablecoin? And so when I started this project, I wanted to do better than anything that had been done before and make it really clear. Because to me, like if you come from structured finance, there are ways to deal with that. There are, very clear principles you can use. And those are the principles that we applied to BRLV. And so we have a completely bankruptcy remote structure such that, again, if we go bankrupt, our holders will get their money back. And the way we do that's a little bit complicated, but ultimately it's a separate company that holds the reserves on behalf of our customers. And those reserves are 100% Brazilian government debt. And so there's no like bank products in there or anything like that. It's just government bonds. And it kind of goes back to the concept of like, man, if you're holding the Brazilian real, like, we're many decades after the gold standard, right? So currencies they're backed by like the full faith and credit of the government that issued them, right? So if you're taking the credit risk of the government anyway, then you might as well be getting the reward, i.e. the interest that government pays on its credit, on its debt. The problem is that you don't want to, when you start putting extra layers of risk there, then that kind of equation gets a little bit out of whack, right? So we want to give people, especially our institutional partners, right, the reward of working with government bonds since they're taking the risk of holding the currency and not at any additional layers of risk.
Talk a bit more about your go-to-market strategy, at least in the kind of the first phases of this. It appears that you are primarily focused on institutions and fintechs and these types of partners. Maybe talk a bit more, give some color on who are these institutions exactly, who are the early adopters. Are they Brazilian folks? Are they international folks that are looking to have access to this yield that you're mentioning? And maybe what's been the response so far from users?
We're 100% focused on institutional flows, and the reason for that really is that we want to have 1 trillion reais of BRLV issued in the next 10 years. to do that, we have to be very mindful about what kinds of flows we're going after. And the biggest flows today are institutional flows. So we're just laser focused on those flows, and very happy to be partnering with some great, large institutions. Those guys have really high standards, as you can imagine, for how, the structure that they can deal with. They, when you sit across from them to, do these early deals, it feels like a negotiation almost, because they're trying to like poke holes in your structure. But to us, especially in retrospect, they feel like design partners, because we were, working together to make the most robust, safest, most bulletproof structure possible. And so we're really kind of on the same team. There are guys like we just announced, or we're in the process of announcing this week. Everyone from international carry traders that want to access the Brazilian interest rate, like we just talked about, to even like local asset managers that are becoming more and more interested in crypto assets and doing different things with stablecoins. And so I'll give you one example, which is a very large, famous, it's a fundo de ações, right? It's like a regular long only, equity fund called Atmos Capital in Rio. And they're amazing, super, super smart guys. And they're holding the stablecoin in their regulated fund, right? Because they see cool use cases within that context. And then we have another large, subscriber that came in early, which is Citrino Gestão. And that's the family office of the Emílio de Moraes family, which is the family behind Votorantim, the conglomerate. So it's a big industrial conglomerate that's also forward thinking and wanting to explore all the ways that stablecoins can make an impact, not only in their sort of financial operations, but also in the underlying businesses. So it's very exciting for us.
I remember the first time you told me about this idea, like maybe 18 months or 2 years ago or so. You were kind of framing this as like an alternative to Drex, essentially, right? This whole question of like who gets to keep the yield, right? In the banking, in the Drex model, like the banks would essentially keep all the yield, and you wanted to create kind of an alternative to that. Now that Drex is no longer a thing, at least not in its original vision, it does seem like there's an opportunity for private sector stable coins to really win the day here. So I was hoping you could talk about this dynamic and like how do you see BRLV fitting into the tokenized Brazilian economy and maybe like the post-Drex landscape, I guess, if we can call it that.
I think the first thing to say is I appreciated you as an early sounding board for this idea, whenever that was, 18 months ago or so. And I've learned a lot since then. And I think Drex, I don't know exactly what the status of it is now. I think you sort of hear conflicting things, but I hope it continues in some form. There's a lot of ways that Drex should be incredibly useful in the Brazilian economy. I think the difficulty with Drex was probably like the blockchain design part, which is just it's really hard for a central bank to come up with, like it's like designing blockchains is really hard, right? Like people, and they get better over time, right? So I think, today we see high performant blockchains that are scaling a lot better than the ones than like ETH mainnet scales, or, some of the other early competitors. So the central bank, I commend them. I think they're one of the best central banks in the world. I think every fintech builder in Brazil is building on top of work that they do every day, and I'm very grateful to them for that. And the Drex program, I think, even if it doesn't continue, will leave a very positive legacy. And I think just the fact that they got financial institutions thinking about how to make this infrastructure work better and to use on-chain rails is amazing, and really put Brazil not only on the map in crypto, but cemented Brazil's position as an innovator in the digital asset space. I never thought that the technology that the central bank chose would scale to be like a PIX level. For anyone who's not in Brazil, PIX is the Brazilian domestic instant payment system. It never felt to me like it had any chance of scaling to be a PIX level solution in terms of like transaction volume of PIX, which is like who knows how many billions of transactions. And that meant that it was, and not only that, but like the Drex system, again, like they're trying to solve privacy problems. They're trying to solve all of these hard technical problems that I don't know if it's any specific central bank's job to try and solve all of those problems. And they also had this really hard question of whether the system would or should interoperate with the rest of the digital asset ecosystem. So one way to think about it is like, is Drex an intranet between banks, which is kind of what Pix is, right? Or is it a piece of the digital asset financial internet, which to me is way cooler and more interesting. And so at a minimum, I always thought BRLV will be a digital real that can live on whatever blockchain you want. And we run a cross-chain protocol that's similar to like CCTP that we made. And that allows us to put BRLV on any chain, essentially, and then we can move liquidity around between chains. So
yeah, we can go down that road. I mean, I guess it seems like there's a big impetus now on, once the Drex project kind of started winding down or pivoting or whatever, whatever they end up deciding they're going to do with it. It seems like the impetus is now kind of with the private sector to sort of, okay, like ball's in your court now. The central bank did some heavy lifting. Now it's like a relay race, like passing the baton to the next guy, essentially. So, I mean, how do you foresee something like BRLV or perhaps even any other stablecoin in the Brazilian market, maybe fulfilling some of these functions that maybe were originally, in the Drex vision, but have been passed to the private sector?
well, I mean, the short answer is 100%. I think the baton will, and I think it was sort of inevitable that the baton would be passed to private market participants, similar to like back in the day when the central bank was working on Pix. They were floating around the idea of having like a central bank Pix credit card, right? And then eventually they passed the baton to the market, and we got this massive, sort of Cambrian explosion of fintechs and a ton of innovation. And I think everyone's better off for it. And I think we're going to see a similar dynamic here. One kind of interesting way to think about it is like, what do we think the future of bank deposits will be? And so I think you have sort of three options that I believe will run in parallel. So they're not mutually exclusive. One is that bank deposits stay off chain the way they are today. One is that bank deposits get tokenized. And one is that you have sort of an interoperability layer between bank deposits, which will be a stablecoin, right? And so maybe diving in on those a little bit, like the tokenized deposits, banks love tokenized deposits because it's a way for them to continue doing like fraction, what do banks do, right? Banks get to take deposits from customers and they get to kind of leverage the deposits, right? They get to, I mean, it's actually a little bit more complicated than that because what they're really leveraging is their regulatory capital, which is a little bit more complicated. But anyway, they take deposits as one of their funding sources and they can, loan those out. They can do a bunch of stuff with that, which is very cool. And they want to be able to still do that, right? They don't want all their funding to drop. So they're going to issue tokenized bank accounts. So they're certainly going to go down that path. And the challenge of that is that, we just had a big bank blow up here in Brazil a couple of weeks ago from Master, right? Banco Master. And if you think about it, like one of the most basic problems of a tokenized deposit is what happens if, Aaron has an account in Bank A and you want to send that tokenized deposit or part of that to Bank B, where you also have an account. Well, that tokenized deposit is a liability of Bank A, right? And so Bank B isn't just going to accept a liability of Bank A on its balance sheet. That would be like, a bank taking a Banco Master liability and, when it blows up, guess what? You're not going to get paid back on that. So you need a way to settle those transactions between banks. And to me, the easiest way to do that is to have a very neutral platform that actually, instead of being fractional reserve, is fully reserved with something that everyone agrees is safe, which is Brazilian government debt, right? And so that's where I see BRLV filling perhaps a little bit of the space left by Drex in this sort of like interbank settlement of tokenized assets. Because at the end of the day, a bank can issue a tokenized deposit anywhere it wants. It doesn't need to issue it on the Drex chain, but how it interacts with other banks is going to be a space that I think we can help out a lot in.
Interesting. No, that's a really useful example, and it helps clarify a bit more of maybe the kind of the niche that you guys are occupying in the Brazil stablecoin market, right? Where this isn't necessarily something to be used as a way of onboarding onto an exchange so you can do trading, or this is strictly you're focusing on these types of institutional use cases and fostering this interoperability between banks, like you're just mentioning. I think that's a really helpful illustration for what the role of an asset like this could play in this kind of tokenized economy. That seems like Brazil's still heading toward like directs or no directs, like the everyone's kind of moving in that direction, right? So like something like this is going to have to exist underneath to make that all work, to kind of be the glue that holds it all together. I did want to ask a bit about, you alluded to this a bit earlier, some of the original Nubank connections that you had in your early days in Brazil. And just wanted to mention, it looks like you've managed to assemble like a really impressive kind of powerhouse team of not just folks working at Crown, but also folks on your cap table. And tell us a bit about like who is supporting this, who's supporting you in this venture, and like what was sort of the light bulb moment for some of these guys, like Ed Wibble from Nubank or whomever, these other folks who are supporting you. And you've also got a nice mix of VCs, of like blue chip VCs who are from not just Brazilian based but also US based as well, who are major players in crypto. I think Paradigm obviously is one of the blue chip funds, and they've just recently announced investment with you guys. Like what was kind of the what would it take to sort of get some of these guys to be supporting you here?
It's a cold start problem, right? When you start something from zero and you got to kind of convince everybody that it's going to work. And I would say, you get out and you make your case. And in my case, it was really a first principles argument about what I think needs to exist in the world. And that resonated very quickly with guys like Ed. Our seed investors got it right away. So that's Valor and Framework Ventures, and we have Coinbase on the cap table, Coinbase Ventures, and Paxos as well, Norchi Ventures. And so we had a really great group initially who bought the idea, and then it was my job to build on that and get more people interested in it. And so, we have some folks from, we have Ed, and we also have some other folks from other major banks involved. Although we have no banks on our cap table. It's very important to us that remain a neutral platform. And then I met Andre Lara Rezende. So this is a very famous economist and former director of the Brazilian Central Bank, who was responsible kind of for Brazil's transition to the real after this big inflation shock in 30 years ago. And he's been amazing as well. So it's there's a lot of people out there who independently were coming to the conclusion that stablecoins are the future and that they have a real place in Brazil. And we're kind of waiting for someone to do something. And I feel very lucky with the timing. I mean, honestly, when we started this project, I was telling everybody, like, we might do this and nothing will happen for 2 years. So we need to raise enough capital that we'll just keep building throughout a crypto winter or whatever happens. And there might not be demand. And, very, very happy to say that it's the exact opposite. And there's a ton of demand, and that's great. And that brings its own set of challenges. Feels like instead of being too early, we're a minute too late, right? So we're catching up. And then went out just, of course, there was the Circle IPO in the US and the Genius Act and all the VASP rules in Brazil that just came out in final form. And then went out into the market again just to sort of test the waters. And Paradigm came and really engaged with us. And they're one of my favorite investors in crypto, and had a wonderful conversation with them and was really, really happy to do a deal. They're first in Brazil. I'm really happy to bring them to Brazil. I do see them as sort of, this isn't sort of me making this up, but I know a lot of people see them as the Sequoia of Brazil. And I do think it's an important moment for Brazil. It's going to sound grandiose, but I'll just say it anyway. David brought Sequoia. So David from Nubank brought Sequoia to Brazil for the first time, and that was a big deal for Brazil. And I think that bringing Paradigm to Brazil is a big deal for Brazil. So it makes me really happy. I'm sure it's not going to be their last investment in Brazil. And I've already, been connecting a bunch of founders with them, and they're really, really psyched to meet everyone down here.
Well, that's amazing. No, it's really cool that you're kind of playing this ambassador role as well, right? I mean, I think you've got the right kind of just skill set and like networks and connections across these different kind of corners of fintech on both continents. So you're able to connect some of the dots there, which is great. A huge value add for sure.
Yeah, just to say, like, there are a ton of amazing builders in crypto in Brazil. And so I don't think there's anything necessarily super special about us, but and I want to give them the credit. I think the reason Paradigm's interested in Brazil now is also building on all the work that crypto builders in Brazil have done over the last decade. So props to everybody in the space, and we're just trying to do our part.
So you mentioned earlier in your earlier remarks about how BRLV is the world's first stable coin that actually offers its holders like the legal rights to the reserves. And I guess this is something that honestly I hadn't really even thought about until I saw you talking about it. And I was like, oh yeah, like I guess that seems like that would make sense as something good to have in a stable coin. But maybe talk a bit about, I mean, I know you have a finance background that helps you kind of just analyze these problems in these terms, right? But maybe talk a bit about like why is like nobody done this before? I guess maybe is my first question. And then how would like a holder actually go about like exercising that right, in the event that something were to happen? Like how would I actually like get my money back out of this through a legal process?
Yeah, well, the reason, I mean, I don't know why no one's done it before, to be honest. I was surprised nobody, I was surprised nobody had done this in Brazil, and I'm surprised that no one has really done it in the US yet. It's not easy and it's expensive. So when you don't have scale, it's like too expensive to do. And so like we just had to raise extra money to be able to pay a lot of lawyers and folks, money to do it. And I think it helps that I could do a lot of it myself, like at least the thinking it through and reasoning and checking stuff. How it works is a little bit complicated, so I'm not going to go into all the technical details. If anybody wants to reach out to me and hear more, they're absolutely welcome to. But you have to have like a guarantee agent or a security agent that is functioning as a representative of the holders that has access to the reserve account. And so you have to imagine that, and this is like a sort of a principle of these like structured finance things, where if the issuer is out of the picture because they went bust, where do people go, right, to get their money back? And so that's some kind of agent in the system that holds the key to the bank account. And then obviously very important that the bank account can't get sucked into the issuer's bankruptcy. And so that's a lot of legal stuff that goes around that. And then you have to have, of course, like guarantee structures between the reserve structure and the issuer so that the whole thing gets stitched together. But long story short, you need an agent acting as kind of a representative of the market, and folks can go to that agent to get the money back. And so it's like one person that that you can go to.
So it's essentially like there's an independent entity that's essentially that's not Crown, that's essentially holding the funds that I would go. Yeah, it sounds like there's a bit of complication in there on the legal side, but but the idea is that there's another entity that I could go to get the funds back from, essentially.
Yeah, the funds are held, right? The bond, Brazilian government bonds are held in a regulated custodian in Brazil. And then they're kind of like, you imagine they're kind of pledged to the market, right? To everybody who holds the stable coin. And then the agent that makes that work is another entity in the middle. And so it is complicated, but yeah.
It seems really important though. And it's and especially when you're dealing with folks on the institutional level, that seems like something that these folks are going to demand, right? That type of issue.
Yeah. So, well, and they don't talk to you unless you come to them with something that kind of looks like in the first place. Because I think that was one of our lessons was like when you show up with a really well designed structure that gets you 85% of the way, then the last 15% is this sort of design work that you can do in collaboration with whoever your institutional partners are. But you've already come up with most of the work, which sort of gets them interested, and they say, "Oh, okay. Actually, we could do this," right?
So this model that you've built, is this something that is very like unique to Brazil, just given some of the unique sort of facets of the market that you were describing earlier, like just the size of the market, the high interest rate environment, et cetera? Or is this a model that could theoretically be like copied and pasted into, a different country, a different currency? Is this like a template of some sort, or is this something that's like maybe just very specific to Brazil based on Brazil's unique attributes?
Yeah, I mean, I would go back to what we talked about earlier, where if you're looking around the world for good candidates for this model, I would look for big money supplies, friendly central banks or friendly crypto regulations, and interest rates that are, real interest rates that are positive and outstrip inflation. And if you find those three things, especially with a big money supply, then you probably have a good candidate for this model. And we do see other opportunities around the world. We're a very small team. We're like 7 people right now. So we're laser focused on Brazil. And I don't imagine that will change in the near future, but we do see this opportunity in other places as well. I think Brazil is the biggest and the best by far. So we're really, really amped to be doing it in Brazil.
And then you mentioned earlier that your objective is to have 1 trillion in circulation, 1 trillion BRLV in circulation within 10 years. I guess why that number and what ultimately would have to go right for that to happen?
So if you look at, in the US, people talk a lot about what percentage of the M2 money supply is now represented by stablecoins. And it's still pretty small. It's like 1 point something percent. And there's a lot of folks predicting that will be a double-digit percentage very soon. Some people say by 2027, some people say a little bit longer, and there's some pretty wild estimates out there. That all reflects this migration of financial infrastructure from off-chain to on-chain. And everything that moves on-chain needs stablecoins, and then more of the money supply becomes represented by stablecoins. Brazil, for the reasons we talked about, I think is going to follow the same path. It'll be slower. It's not the global reserve currency like the dollar, so the use cases are a little bit different. But it's a very big economy, not dollarized, into financial innovation, moving with the trend of tokenization generally, and I would say leading the trend in a lot of cases. So when we think about the percentage of M2 money supply in Brazil that should be tokenized, that should be represented in stablecoins, I kind of think it should be a high single-digit percentage in 10 years, which when you kind of look at the math, feels like it's about 1 trillion BRL. And I do think it's a winner-take-all market, if not a winner-take, winner-take most, winner-take-all market. And so we're out to win it.
So you think it's the same type of play with, like, there'll be a USDT and a USDC type of dynamic where there's one dominant player, there's maybe one number two who's competitive, and then anybody else who comes along is it's too late to the game, essentially.
Yeah, my best guess is that it's going to be one, and so we're playing the game as if there's only going to be one, and we intend to be that one. It could be that there's more.
Great. Well, John, I really appreciate you coming on the show today. This has been super interesting. It's really incredible learning about the work you guys have been doing, and I appreciate you're very articulate about the market. You've spent enough time in the market, in the Brazilian market generally, to like really understand these issues intimately. So it's really kind of cool seeing you synthesizing all these pieces of information and like coming up with these ideas. And I don't know, I really enjoyed this conversation. So I really appreciate you coming on the show. I'll turn it back to you. If there's any final thoughts or any call to action for the audience, anything else you'd like to add to the conversation here.
No, Aaron, thank you so much for having me. It's been a pleasure to speak with you. We're lucky. I feel lucky. I get to talk to you pretty often as a friend, but it's different when you get to do it in a structured conversation, hopefully share it a little bit more widely. So thank you for having me. And I would just say for any institutions that are thinking about stablecoin use cases and would like to have a chat with us, we really want to be thought partners for anybody in the market thinking about how stablecoins can help your business, whether you're a bank or a fintech or a neobank built on stablecoin rails outside Brazil, looking at the Brazilian market, or a marketplace or any kind of business model where you might want to use stablecoins. We'd love to hear from you and help you in any way we can.
Well, thanks, John, for your time. Really appreciate it. Best of luck on your ambitious vision. And looks like you guys are off to a great start. So congratulations on all the success so far and the fundraise. And appreciate you coming on the show. And thanks everyone for watching, and we'll see you next time.